This is another video about Bollinger Bands, just for the record, for more education. So we get a lot of pin bars. This is a weekly chart. We get a lot of pin bars. A lot of pin bars that break, either breaks bands or touches bands. You get a lot of good signals. But what I want to show is sometimes you'll get a pin bar. So you see you got your area here. You got this. You got these pin bars here. This one, and this one. This is where you got a pin bar, and it looks like it's in a demand zone because you would consider this to be a demand zone because, or a supply zone. You would think that that was continuing to trade. Well, you would have obviously, if you put your stop loss right above here, you would have been taken out because it didn't go, the trade didn't go your way. This would have been a good signal to stay short because you got two pin bars here that form. But what I want to show is not with the others two, but with this one here. Here's another pin bar that formed, and it still formed into this area. And you took your entry there, and you would have got stopped out if you would have placed the stop above, or even if you'd probably put a 137 pip stop loss if you're using the ATR. But what I want to show is now you finally got this pin bar that broke the band. And that's the reason why sometimes I look at for pin bars that break bands, because usually you start off with the naked charts. And the naked charts, you will see, just imagine that you were here and this is all you see. You would have took them trades because it's, snaps. You would have took them trades here and here because of course it's a supply zone. This would be the zone. And they came here and gave two strong signals that are signaling that 2 weeks in a row, signaling that a downtrend is about to occur. But that didn't happen. Then you get to this point, and it didn't happen again, even though it's in the area of key resistance, and even though it formed in the area of key resistance, it still didn't happen. And then you get up here. So now what? Is this a fresh zone? Is this more fresh? Because maybe you could just eliminate the possibility of plotting indicators, just looking at fresh zones. So price, as you see, that could be a fresh zone. Well, that is a fresh zone because when price got up here, it never retested this area again. But I just want to add that the pin bar or the Bollinger Band and divergence gives you a good signal. This would be your great signal to enter in on, because you got the pin bar that broke the band. You had 3 times that it had pin bars. And usually the mindset that you want to have is, if one entry don't work, go for the next one. If that don't work, go for the next one. You never really it's never really a set of stone. But this one is a better signal because now you still have divergence from here to here. They made the same highs on the CCI, but it made, as you can see, it made higher highs here, but it made the same high here. So that means that there's not a lot of, in a sense, momentum behind the uptrend. The trend is probably just going up because people are just locking in profits, or I don't know, it's just going up for whatever reason. But there's not a lot of people supporting that uptrend based off of this divergence. So that's the reason why when it got up here, Now look at the drop that it had. Now this is another signal that you can tell that what I would have done if I would have got into this trade. I didn't get into this one, but if I would have got into this one, I would have obviously looked for taking my profits down here because these were strong signals before. Usually I like to use a rule of thumb of divergence of when it starts, where that's where it has the possibility to go back. And as we can see, it came back all the way down here in this area where it tried to form resistance and form to support, or tried to form to demand, and it still broke it. So just keep that in mind. You still had another pin bar that formed that signaled more selling, even though it did a gap down. That's showing you that the selling and pressure is slowing down. So you might want to get a little bit, be more aware of your trade, because you had your gaps. Then you had a pin, or you call it dojis, that formed. You had another bearish pin bar, which would have signaled you to keep that the trend was still going to stay down. Another one that the trend was going to stay down. And then you had your big bullish candle right there. Now the reason why you had this bullish candle is because demand zones. So this area of this wick has never been tested before. And you can possibly even take it. So this area is not, this top line is not so fresh no more because it's been tested right here. Usually when I usually do demand zones, I usually start looking at charts. I don't cut through candles. I only cut through candles if I go through areas and I see swing points or swing highs. Then I may use those total swing highs, but I usually don't cut through candles. But so that's the reason why I look at this one as a demand zone. But as we see, it's been tested, it went up, and now it's been testing it again. So all your orders and everything right here is getting a little skeptical. There's not a lot of what I was taught of terminology of leftover orders or leftover buy orders here. So, but that doesn't mean that wick is still not a fresh zone, because sometimes prices still hasn't got to here. So, but this was all about the Bollinger Bands, and you can see that happening throughout a lot of time frames, even if I probably go down to a daily time frame. Now, is this a good bearish band bar? Don't know. I actually just exited this trade. No, I'm still in it, because I took a buy off of this pin bar right here, this bullish pin bar. But as we see, we have some divergence. You're making, the momentum is going down, down, down. So, but let me see if I can find an example over here where price has made a high. Let me even look at this just to see how that trade might. Even like last week, this gave a bullish pin bar. It's not too much bullish, because usually if you want a bullish pin bar, you at least want the body of the candle to close in the direction of the trend that you're looking to go in. So I'm looking to go long, so it would have been better. This one is a little bit stronger than this one. I know it don't have the arrows on here. These are stronger signals because the body is 25% or less than the wick. These two are probably 30% or above 25% of the wick. So they're not as strong signals as these. That's why the arrows is not above them. And as we know in trading, nothing is guaranteed, nothing is set in stone. So even like you still got your pin bars that still don't work. Those are pin bars that didn't work. If you would have got in on these pin bars, this one would have worked. It depends on where you would have put your stop loss at. If you would have put your stop loss right above, right outside, then you possibly would have lost. Even if you would have did a trailing stop, unless you did a trailing stop all maybe a few pips above here. But the reason why I say if you did a trailing stop is because it looks like price opened, well, price opened up and then it went down. So that would have made your trailing stop move down, inch down, and it would have probably moved your trailing stop to right here. Then it shot up and it would have took you out and then went in your way. Even still here, this pin bar didn't get an arrow on it, and it still would have, I don't know if it would have had a 2-to-1 profit. You still probably be in a trade right now if you were short on this one. But the reason why you probably wouldn't have took this one is because it's still at these zones right here, or these levels right here. But you can still enter this trade, trading all the way down to this demand zone that I recently plotted. But back to the Bollinger Bands on a different time frame. So you have a doji or pin bar here. There's still a pin bar. Pin bars and dojis are intertwined or interchangeable. Same here. It look like these would have worked. And of course, it all depends on how your entry was set up. If you did a trailing stop, if you did a or a hard stop, it just depends on how much you did it. But this would have worked. These two. This would have worked, but they still aren't. For the example that I'm trying to give, this one definitely would have worked because you went from here all the way down. So let's see if this is right here. This pin bar formed, and it's forming an up, and it wouldn't have worked. It would have worked, or it's a good signal because you're still in. If you're doing demand, you're in fresh demand because these are 2 wicks, and it's the first time it's being retested. So 2 wicks formed, but it still didn't work. I'm just trying to see if maybe this would have gave me divergence. Let me see. So you had here, no, because it just formed here. And it's still a divergence. Divergence is when you're making higher highs, but your chart, when divergence in the uptrend, for uptrend is, I look at it as an equal than and greater than sign. This is I try to simplify a lot of things. So usually, if you gotta, if you're looking for divergence to the long, you want to have, in a sense, your divergence want to form a greater than symbol, meaning prices on the chart want to be going down, and divergence want to be going up. This is not divergence because this is going up and up. See, up and up. Divergence is so, and on the same, and it's this opposite for when you're looking for a short signal, you want to look for a less than sign. Prices is going up, but this is making lows. Up, lows. That's a less than sign. So that would have been a good signal because once this formed, and you still want to have this signal until, well, let's see, because sometimes, as you see, if you was right here that day, you wouldn't have got this signal until this day when it closed. And it closed outside the band with a divergence, and you would have probably put your a market order or whatever, or buy on stock. It looked like it came back up, or sell on stock, and it looked like you would have got some good profits here with that divergence. I was looking for divergence with pin bars still, just for the example, see if it works. So this is divergence definitely, because you see here, this is the lowest that it made on the CCI. Then it came down to here. Now this is going down. This is the greater than sign. But this is the greater than sign. Yeah, here, lows. and here, ups. Come on now. Ups. So now, where would your entry be at? That we'll have to look back at the charts because they're not giving us any type of pin bars to the long side. As we see all the pin bars that we have here, this is one of them. And as we see, this still formed divergence. And if you would have got in here, it would have been a loss. But as we know, with some trading strategies, they're all losses. Am I in that trade? Yeah, that's the trade I'm in. Why did I move my stop loss? One thing I did just notice that you can see when you're moving your modifying your trade, as you see, it tells me how many dollars I'm risking, so I could lose $24 on this trade. That'd be 936 pips. $21 right here, and then I can see I take profit. If we want a 2-to-1, it should say $40 or something. And you see it does. It's just a little blurry. This a 1-to-1? Maybe I moved it and trade changed. But back to that divergence. Let's see if we could have found an entry on that. Wherever it was at. Up. So we're right here. Let's see. Going all the way down here. This is one thing that when I don't cut through candles, what I had to start learning. So let me just plot a line on here at the lowest point that it went. To me, there wouldn't have been no signal. The only signal that I would have got is that pin bar, and that pin bar was the perfect one. Was that the divergence that we were looking at? No, that wasn't even a divergence. That's what I thought. We're up here. So obviously we would have been looking at the start. We would have been possibly looking at this one right here as a demand zone. This pin. Or this indecisiveness in price. The reason why I say indecisiveness in price is because price was trying to figure out if it was going to go up or down from here. And even from here, as you see, we had inside bars. We had an inside bar here, here, and it was all inside this candle. Even though everything was still showing to the uptrend, to the downtrend, because you had this outside the band, prices dropping. And then of course it made us the deciding factor was this candle right here to say that this area, and that's what I'm trying to explain why I say this area is, because it was indecisive right here. Let me delete all this off of here. Delete everything off. Prices was indecisive here, as we see, and this was another signal, gap down. Even if we take the, of course it would do that. Well, I can't do it no more.